All right, today it is time for another portfolio update, and this will be for the month of June. And this one is actually a really good example of what real investing looks like. Not every month is going to be straight up, not every month is going to be some crazy new high, not every deposit is going to immediately make the account look better. Sometimes you keep investing, you keep doing the right thing, you keep putting money to work, and the market will still pull back against you. That's exactly what happened this month. And so it's good that I'm able to show you guys this. Last month, the portfolio was around $297,000. This month, it's at $303,515. So it's up roughly $6,500 in the last month. Obviously, that's a good thing. But here's the important part. I contributed around $8,000 in the month of June so far. And even with those contributions, the portfolio performance over the last month was still negative because of the June pullback. So on paper, the total value went up, but the actual market performance pulled back. And this is one of the reasons I love doing these updates, because this is real life investing. This is not just showing green days. This is not just showing exciting milestones. This is showing what actually happens when you're building wealth month to month. Sometimes you add money in the market helps you, right? Sometimes you add money in the market works against you. But either way, the long term investor keeps building, and that's what's important. Quick disclaimer though before we continue, I'm not a financial advisor. This is not financial advice. I'm simply just documenting my own personal investing journey as I work towards financial freedom, soon military retirement, and eventually building my own $1 million invested portfolio. Now let's start with the current numbers. The portfolio is currently sitting at $303,515. The cash balance is 49 because I never really keep cash in there. Total amount invested 262,328, and total profit still sitting at around $45,000 or 17% gain overall. So even though this month pulled back, the portfolio is still up $45,000 total, and that perspective matters. Today, when I took the screenshot, the portfolio was down $2,763 or about 0.9% in a single day. And I know for newer investors, seeing a red day like that can be uncomfortable. Nobody likes opening their account and seeing thousands of dollars disappear in one day. But once your portfolio gets larger, that swing becomes normal. A 1% move on $300,000 portfolio is around $3,000. That sounds huge percentage wise, but percentage wise, it's just normal market movement, right? And I'm used to seeing it now. And this is one of the biggest mindset shifts that happens as your portfolio grows. Early on, a few $100s feels like a big move. Later on, a few $1,000s can happen in a single day. Eventually, if this portfolio reaches a million, a 1% move would be $10,000. That's why emotional control is so important. Red days can't make you panic, right? You've got to stay focused during them. Now let's talk about the 1 month performance, because this is the part I really want people to understand. Over the last month, the portfolio was down 3,176, while the S&P was down $4,776. So even though my portfolio was negative, it still outperformed the S&P 500 by about $1,600. That means the market pulled back, but my portfolio pulled back too, but held up slightly better than the benchmark. And this is why I don't panic when I see a down month like this. A down month does not automatically mean something is wrong. It does not mean the strategy is broken. It does not mean that I need to sell everything and start over. It simply means the market moved lower during that period. That's part of investing. That's normal. The biggest part, and I'd say the biggest mistake a lot of people make, is that they only want to invest when everything feels good, right? They want to buy when stocks are hitting all-time highs, when the news is positive, when everyone's excited, and when the account is green. But then when markets pull back and prices get cheaper, they freeze. They stop buying. They wait for things to feel safe again. The problem is that by the time the market feels safe, prices are already going higher. That's why I kept investing through the pullback. I contributed around $8,000 so far this month because my long-term plan did not change just because June got a little choppy. I'm not investing for 1 month from now. I'm investing for years from now. I'm investing for financial freedom and my retirement, and for a future where my assets produce income and growth and options for me and my family. When the market pulls back, my contributions buy more shares. That is the part that sometimes people forget. If I was already planning to invest $8,000, I would rather invest that money when prices are lower than when everything is more expensive. A pullback only feels bad if you focus on only today's account balance. But if you're still accumulating, pullbacks can actually help you long term because your new money gets put to work at better prices. This is especially important for someone like me because I'm still in the accumulation phase. I'm not retired yet. I'm not living off of this portfolio yet. I'm still actively building this account. So when the market drops, I try to view it as an opportunity instead of a disaster. That does not mean that I enjoy seeing red. Nobody enjoys seeing their account drop, but I understand why it matters long term and I take advantage of that. The portfolio also continues producing passive income. Right now, the passive income number is around $4,435 annually, or $369 per month, or $12.16 per day. That means even during a pullback, the portfolio is still producing income. Dividends received so far this year are $2,565. That is real money coming back into the account simply because I own assets. And again, I know $369 a month is not enough to retire on by itself, but it's a meaningful number. That is a utility bill, it's groceries for part of the month. That is money that can be reinvested. That is income that continues growing as the portfolio grows. If this portfolio eventually reaches $1 million, and it will, that passive income number becomes much more powerful, and that's why I'm tracking it. Another number I pay attention to is total profit. Even after the pullback, the portfolio is still up $45,000. Capital gains are sitting at around $41,186, and dividends received are just over $2,500, like we talked about for the year. So yeah, June had a pullback. Yes, the last month was negative, but zooming out, the portfolio is doing exactly what I want it to do. This is why zooming out is so important. If I only looked at like the 1 month chart, I might feel frustrated. I contributed around 8,000. The portfolio still pulled back. But if I zoom out, I see a portfolio over $300,000. I see over $45,000 in profit. I see more than $4,400 in projected annual passive income. I see a portfolio that's still ahead of the S&P 500, even while negative. And I see progress from $297,000 to $303,000 in total value. That's the real story. The market is not always going to reward you immediately. Sometimes you can do everything right and the account still drops. That's where discipline matters. That's where your plan matters. That's where long term thinking matters, because anyone can invest when the market's green. The real test is whether you keep investing when things are red. For me, this month actually makes me more confident in my strategy, not less, because I did what I said I was going to do. I kept investing. I didn't panic. I did not stop contributions. I did not let a short term pullback change a long term plan. And that is exactly how I believe wealth is built. Not through perfect timing, but through consistency. At the end of the day, I'm still extremely happy with this update. The portfolio is now at $303,515, up from $297K from last month. So total value is still up $6,500. Yes, I know I contributed around $8K and the market pulled back enough to make the 1 month performance negative, but that's investing and that's normal. That's part of the process. The goal is not to avoid every pullback. The goal is to keep buying quality assets through the pullbacks so that years from now, those same shares are worth significantly more. That's the mindset I'm trying to keep. That is the journey that I am documenting. And that is why I continue showing both green days and red days. If you enjoyed this update, subscribe to this channel and follow my real journey towards financial freedom, investing, military retirement, building wealth in my 40s, and reaching that $1 million invested goal. And as always, let me know in the comments, when the market pulls back, do you keep investing or do you wait on the sidelines?